Let's bring on board Madhukar Ladha, VP Research at Elara Capital as well, to make sense of the revised valuations that we are working with when it comes to LIC IPO. Mr. Ladha, good afternoon. First up on the valuation front, does it look attractive now? Because initially the estimates were at around 13 lakh crore market cap that has been brought down to 6 lakh crores. But the proof of the pudding was to be in the valuation. How would you assess that?
So, hi, good afternoon to all the viewers. 13 lakh crore was always, according to me, a very aggressive benchmark. LIC is a very different business when compared to the private life insurers, right? The margins are a lot higher for the private life insurers versus LIC. The product mix of private life insurers is very different from LIC, and the entire channel distribution, all of these things are very different. And additionally, LIC is not growing as fast as the private life insurers. So I think at about 6 lakh crores, the valuations are are fair right now. I wouldn't say that they are cheap. I think they're fair, and much will depend on how LIC as a business executes over the next couple of years uh, to for us to really assess whether you can make additional returns on that name or not.
And Mr. Lara, also wanted to get your sense, how does it stack versus the competitors? And at this valuation, would there be enough upside left for the investors? Because that has been the so-called complaint of the retail audience after the kind of IPOs we saw last year, which were the darlings of the stock markets at that time. And now we have seen the correction to the tune of 40-50%. Can there be a different story playing out for LIC?
Well, I don't really expect a big listing pop as such. Anyone sort of investing should have a longer time frame in mind, especially with LIC. And as I said, the business is very different. So the entire product mix of having a lot more of par policies than non-par. Par policies have, uh, a lower profit margin. Also, protection is very low, just under 0.5% probably of their total individual business. Uh, and protection is the high margin business. Non-par is also low, just about 4% of their business. So the product mix is skewed to low margin products, and that sort of caps the VNB margin. Uh, LIC has been saying that, it states that in its DRHP that they want to increase the high margin business. Now, it needs to execute, it needs to show the street that it can do that. Yeah.
Okay. Hi there, Madhukar. Avan joining in. I just wanted to understand, what exactly this would mean for the entire insurance industry, because the insure tech industry, if you will, is going to see a huge benefit now with the LIC IPO, because a lot of the public insurers in the country were evaluating the digitization, of the customers' journeys. Is this going to get a huge boost now with LIC's listing?
So for the other insurers, I think large part of LIC's IPO and overhang, so to say, is already sort of priced into the stock. I think closer to filing the DRHP, we had seen all the prices correct of the private life insurers. Post that, there has been some recovery. I believe that private life insurers are a more attractive and more compelling bet. And post, I mean, and this sort of an event is a good time to enter those names. So stronger growth profile and stronger margin profile is what we see out there versus LIC. And in terms of the insured tech industry, I'm not too sure how much LIC changes their business model. Remember that still online, a lot lesser of the savings products are sold. The online or the tech industry is selling more of term insurance and ULIPs, where LIC probably has a much lower share in its overall mix and in the countries or if you look at it on an industry level mix as well. So I don't think LIC really changes the insure tech space in any big way right now. Yeah.
Thanks very much for joining in and sharing with us your outlook on the LIC IPO as well as the overall valuations and what it means.